You lowered this year's full-year EBITDA guidance with 24% to your previous guidance due to FX headwinds, a revised timing of new contract launches, and a slower market development in Brazil. On the positive note, you signed 12 agreements with different global operators, with one of the major operators, Superbet. When can we expect to see the contribution from this in your numbers?
Yeah, so definitely we lowered our guidance. It was not so much driven, I would say, by the things you mentioned by Brazil. Of course, we had some tax headwinds, like everyone in our industry, especially operating in Europe. It was mainly driven because with a very big new customer, Ontario Lottery, we decided not to launch already in December, but now the launch was delayed a little bit until early January, and this shifts some revenues to 2026. This was the main reason for shifting the guidance. Everyone knows that Kindred and Leo Vegas are moving to the in-house sportsbooks away from us. This will come also next year with a headwind of around 15 million euro on revenues for us. But I'm very confident that next year will be the first year after several years where we will be able to report top-line growth again.
And then you acquired source code for a player account management platform from Omega Systems, which will enable you to enter Nevada. Could you elaborate a bit on the timeline as to when this will be in place?
Yeah. So we have been a sportsbook company now for 14 years, which means sports is our DNA. We were looking to acquire a PAM already for many years. Now we're able to supply a full turnkey solution. Nevada is only the first short-term opportunity here for us. Nevada is so difficult to get licensed, it's the gold standard, which means we had troubles to find a PAM partner to leverage all the opportunities we have in Nevada. Nevada is a 500 million GGR sports betting market, and we got a lot of inbound calls, so we have great opportunities there, but we needed a PAM to actually get these revenues in. Coming back to your question, I think mid next year, before starting of the NFL season, we will have the PAM licensed in Nevada, which takes some months, and then we will start working with the first operators there.
And you also signed 7 agreements with Turnkey, also an extension to your retail turnkey sportsbook partnership with Penn Entertainment. What does this mean and how important are these agreements?
Yeah, we have a clear OKR in our strategy to more diversify our customer structure because, as discussed a minute ago, Kindred and Leo Vegas leaving was quite hurtful for us in the last few years. So our clear goal is not to be that dependent on one single operator. So we have now 60 plus operators in our turnkey network, and we add more or less every month now. This is a clear goal going forward as well. Penn is a super important customer for us. We run all the 60 casinos for them in the US. So to extend this deal for 2 years more, of course, is a super important deal for us.
And what does your pipeline look like?
Yeah, so we signed 12 deals now in the last few months since 1st of July. So there's definitely a great momentum on the commercial side. Our pipeline is not empty now after these 12 deals. So more deals are coming in the next few months. We are very excited about our opportunities in South America, North America, but also in Europe.
And will you be able to return to growth during next year? And if so, can you give some color on what to expect?
The short answer is yes. And again, as the pipeline is looking good in South America, not only in Brazil, everyone is talking about Brazil, right? But South America is also Mexico opportunities, Colombia, Paraguay. There are so many countries now in South America regulating finally betting. It's the next gold rush, I would say, after the US, South America. We have made some signings now also in Europe. In the US, of course, Nevada, next big focus for us in the next few months, but also our great relationship with Stripe we have in the US. There's much more coming for us next year.
And how do you ensure you operate only on white markets, and how do the increased regulations affect your efforts in market gambling activities?
Yeah, that's a very good question. Thank you for this question. I think especially on the supplier side, not so much anymore on the operator side, there are still a lot of suppliers who think they can dance on the black side and on the white side of the market. We don't believe in this model. I don't think it's working anymore. 99% of Kambi revenues are coming from locally regulated, so snow white markets already today. We are no B2C company, we are a B2B company, but we only work in regulated countries.
Do people understand this?
I'm not so sure, because still many operators, also suppliers, are in this, I would say, transition phase. We have this transition phase already behind us. We have the transition phase when it comes to technology behind us. We had some tough years, but now with having a great technology in place, with all the regulation coming, also with California, Texas, Asia, being #1 in regulated markets, I think for us the future looks quite bright.
And what do you do to prevent losing major existing clients?
Yeah, so we lost some of them in the past, and I think every company needs to acknowledge some churn. We've now a much more diversified customer base, and we continue to build this, which means the impact of some of our customers leaving in the future will be much smaller to us compared to the past. But of course, in our strategy, we have a clear goal to sign with our biggest customers renewals also in the upcoming months.
And since we are at the Texas conference, can you say something on the technology developments, AI trading, for example?
Yeah, so for us, clearly AI is no buzzword. We started with our first AI trading system already 2022 with the Football World Cup. We have rolled out already soccer, tennis. We are rolling out more and more sports. More than 1/3 of our revenue is already fully generated by AI. This is a big efficiency improvement for us when it comes to managing our costs, but it provides also much better product. So we invest heavily in AI internally.
And so how are you managing the cost side?
Yeah, so we had flat revenues for some years now because of the customer churn you mentioned, but costs continue to grow. This was definitely not good for our profits and for our EBITDA margin. Costs are stable. We are even going down with costs now in 2025. I think this was appreciated by our investors. This is also our goal going forward, and to be back on top line growth then after we manage the churn will have a direct impact, of course, on our profit margin.
So what is your key focus going forward?
So first of all, AI internally, to roll out AI in all our pricing, trading, risk management, make us much more efficient when it comes to headcounts, but also the product will be so much better. We see it already with soccer, tennis, the first sports we've rolled out. And then all the new regulation coming in India, Japan, in California, in Texas, this will drive also different additional revenues, which means business development needs to be focused also on these areas.